Hello, and welcome to Must Read Research on B of A Global Research Unlocked. In this podcast, we offer quick summaries from the prior week's most interesting and impactful research. I'm Candace Browning, Head of Global Research at B of A Securities, and we're recording this episode on Monday, August 24th, 2026. Risk asset conviction remains high, so it's important to verify that the data actually supports the story. This week, we introduce a new tracker designed to monitor the key drivers of artificial intelligence sentiment, examine record bullish investor positioning, ask whether gold's rally has further room to run, and explore new evidence that the K-shaped consumer may finally be starting to converge. Let's begin with our monthly fund manager survey, where optimism remains elevated and conviction around risk assets continues to build. The August fund manager survey finds investors leaning heavily into the no's. No economic landing, no Federal Reserve rate hike before the midterm election, and no reduction in AI-related capital expenditures. Sentiment is now the third most bullish since 2022. Cash levels have fallen to the sixth lowest reading since 1998, while equity allocations have surged to the highest level since November 2021. Investor macroeconomic conviction is particularly positive. In fact, a record 56% foresee no landing, just 4% expect a hard landing, and 37% anticipate double-digit earnings growth. AI remains a source of both enthusiasm and concern. Semiconductors are viewed as the most crowded trade, though mentions declined from 82% in July to 53% in August. AI is also cited as the largest tail risk, while hyperscaler capital expenditures are viewed as the most likely trigger for a future credit event. With 71% expecting no reduction in AI spending during 2026 and 58% anticipating no impact on employment before 2028, Michael Hartnett recommends not abandoning risk assets, but instead rotating within them. So, what's driving that enthusiasm around AI? We've developed a new tracker to help answer that question. The early results suggest competition is intensifying, pricing is falling, and the economics of AI are evolving rapidly. Internet analyst Justin Post's new B of A Frontier AI tracker monitors the signals most likely to drive sentiment around large technology companies, from model intelligence and user adoption to token pricing and infrastructure costs. Anthropic leads the intelligence rankings and captures 65% of spending, while DeepSeek leads usage at 30% as lower-cost open models continue to gain share. Competition remains intense. OpenAI has responded by cutting pricing on GPT 5.6 Luna by 80% and Terra by 20%, while Gemini 3.6 Flash delivers an estimated 17% improvement in cost efficiency. The token price index, which is an important metric for cloud profitability, fell 9% month over month to $2.21, and that's its first decline after 3 consecutive months of gains, though pricing remains 87% higher than a year ago. At the same time, hardware demand remains firm, with graphics processing unit rental prices higher year over year and memory prices up more than 400%. Justin continues to characterize the AI ecosystem as healthy, while identifying token pricing and upcoming model launches from Meta and Alphabet as areas to watch. From AI, let's now turn to another asset benefiting from shifting views on currencies, monetary policy, and fiscal sustainability. The rebound in gold has been driven largely by U.S. dollar weakness, with the metal showing a particularly strong relationship to the euro-dollar exchange rate. Questions surrounding monetary policy, fiscal sustainability, and more recently, foreign exchange and treasury market intervention have all contributed to the move. However, our commodity strategy team's model suggests that current investor buying of gold is more consistent with a gold price of $4,000, and that purchases would need to accelerate further to support a move towards $5,000. Central bank demand remained strong and was well above the 12-month average in June. A more accommodative tone from policymakers at Jackson Hole could also provide support. And more structurally, China's gold imports have continued to set new highs as the country works to internationalize the renminbi. In addition, efforts to make gold easier to transfer and to trade digitally while maintaining a link to the underlying physical asset could also create an additional source of demand. Finally, let's turn to the consumer, where recent spending and wage data suggest a notable shift beneath the surface. Internal data published by the Bank of America Institute shows signs that the K-shaped consumer may finally be converging. Aggregated Bank of America credit and debit card spending rose 5% in July year over year, but fell from June's spending boost. The timing of promotions, fading World Cup-related spending, and gasoline prices explain much of the moderation. Nonetheless, the spend data is still one of the strongest readings of the past 3 years, and more than 4 times the 2025 average. Excluding gasoline and online retail, underlying spending trends remained relatively stable. Spend from lower-income consumers comes as a surprise, as their spending grew 5.4%, while after-tax wages rose 5.2%, which effectively eliminates the gap between spending and income growth. Lower-income wage growth exceeded that of higher-income earners for the first time since December 2024. And the top 5% of consumers do continue to lead spending growth, supported by an S&P 500 that was nearly 20% higher year over year in July and rising portfolio balances. Consumer finances, nevertheless, remain healthy. The share of U.S. households paying credit card balances in full increased across all income groups, while savings remain above inflation-adjusted 2019 levels, with little sign of accelerated drawdowns. So from record bullish investor positioning to the key signals shaping AI tech spend sentiment, to the outlook for gold and signs that the K-shaped consumer may finally be converging, those are the themes shaping the conversation this week. Thanks for listening, and we'll be back in 2 weeks.
Bank of America and B of A Securities are the marketing names for the global banking businesses and global markets businesses, which includes B of A Global Research of Bank of America Corporation. Lending, derivatives, and other commercial banking activities are performed globally by banking affiliates of Bank of America Corporation, including Bank of America N.A., member FDIC. Securities, trading, research, strategic advisory, and other investment banking and markets activities are performed globally by affiliates of Bank of America Corporation, including in the United States B of A Securities, Inc., a registered broker-dealer and member of FINRA and SIPC, and in other jurisdictions by locally registered entities. Copyright 2026 Bank of America Corporation, all rights reserved.